Ford says it lost $3 billion before taxes over the past 2 years.
Ford reduced costs and putting more investments in.
Ford, the company that put the world on wheels, is now facing what may be its most challenging chapter yet. One of the biggest questions on everyone's mind is how Ford's recent decisions, including dramatic price hikes and production adjustments, will ripple through the auto industry. With competitors like Tesla and Toyota redefining the market, can Ford stay in the race? Will its bold moves help it regain dominance or push it further behind? Let's take a closer look at what Ford has done, why it has left the entire car market buzzing, and what it all means for the future. By the end of this discussion, you'll understand not only the stakes for one of America's most iconic companies, but also how these changes could affect your next trip to the dealership. The shocking announcement. What most people do not realize is that Ford, once the undisputed king of the road, is facing one of its most turbulent times ever. Ford's history as a trailblazer, with iconic models like the Model T and Mustang, cemented its place as a symbol of American innovation. These vehicles were not just modes of transportation, but milestones in automotive history, representing freedom, power, and ingenuity. However, the weight of such a legacy has become both a blessing and a burden. Recent years have revealed cracks in the foundation that once seemed unshakable. Layoffs have rocked the workforce, leaving many wondering whether the company's values still align with its storied past. Simultaneously, production overhauls designed to modernize Ford's output have struggled to deliver the anticipated results. In this storm of challenges, a stunning announcement has left the automotive world reeling. Ford's decision to raise prices for its next-generation models, despite a glut of unsold inventory, has created ripples that extend far beyond its dealerships. This moment is not just a challenge for Ford, but a crossroads for the entire car industry. This announcement changes everything because it signals a turning point, not just for Ford, but for the broader market. The stakes have never been higher, and Ford's every move is being scrutinized. As the company scrambles to reclaim its position, the question looms: can it adapt in time to survive this high-stakes game? Ford versus competitors playing catch-up. While Ford wrestles with its identity, competitors like Tesla and Toyota are rewriting the rules of the road. Tesla, with its electric vehicle dominance, has set a new standard for what consumers expect, not just in performance, but in innovation and design. The company's agility allows it to pivot quickly, meeting market demands with an efficiency that legacy automakers like Ford struggle to replicate. Meanwhile, Toyota's hybrid strategy has positioned it as a leader in the transition between traditional internal combustion engines and fully electric vehicles. Toyota's measured approach balances innovation with reliability, providing a blueprint for long-term success. In stark contrast, Ford's struggles stem from outdated systems, leadership missteps, and a failure to anticipate shifting market trends. The gap between Ford and its competitors has only widened in recent years. While Tesla experiments with cutting-edge battery technologies and autonomous driving systems, Ford has often found itself playing catch-up, introducing features and models that feel reactive rather than visionary. Here's where it gets interesting. Ford's recent moves suggest an attempt to reclaim its standing. Investments in electric vehicles such as the F-150 Lightning and bold pricing strategies indicate a willingness to take risks. However, whether these efforts can truly bridge the gap remains to be seen. The competitive landscape is unforgiving, and Ford must find a way to differentiate itself while learning from the successes of its rivals. The inventory nightmare. Imagine walking into a Ford dealership and seeing row after row of unsold vehicles. This is not just a local issue, it's a nationwide crisis. With overproduction of models like the F-150, Bronco, and Ranger, dealerships are running out of space. Some lots are so overwhelmed that cars are being parked on grassy fields or overflow lots, a stark visual representation of Ford's current challenges. The problem is not simply one of supply and demand, it's a symptom of deeper issues within Ford's production and sales strategy. The company's approach to forecasting and inventory management has failed to adapt to the realities of a changing market. Consumer preferences have shifted, and the days when high inventory volumes signaled success are long gone. Today, excess inventory is more often a liability, draining resources and eroding consumer confidence. This leads to an unexpected twist: Ford's decision to raise prices for its next-generation models despite this inventory glut. On the surface, this might seem counterintuitive. How can a company justify higher prices when it can't sell its current stock? The decision has sparked confusion and controversy, setting the stage for the next major challenge in Ford's journey: the price hike dilemma. Why would a company drowning in unsold cars decide to raise prices? Ford thinks it's a bold strategic move, but is it? The decision to increase manufacturers' suggested retail prices for 2025 models comes at a time when sales are already slowing. For many consumers, the rising cost of vehicles has become a significant barrier, compounded by higher interest rates and economic uncertainty. Ford's rationale seems rooted in the belief that higher prices will signal premium value and recoup losses from earlier production missteps. However, this strategy risks alienating its core customer base. Buyers who once saw Ford as a dependable and accessible brand may now turn to competitors offering better value. Meanwhile, dealerships are left to grapple with the practical implications of selling higher-priced models alongside discounted older inventory. This pricing strategy highlights the delicate balancing act automakers face, maintaining profitability while meeting the expectations of increasingly cautious buyers. And this matters to you because it reflects the broader economic pressures shaping the automotive industry. As Ford doubles down on this approach, the ripple effects could extend across the market, influencing how other automakers price and position their vehicles. Ford's story is far from over. As it navigates these challenges, the company's resilience and adaptability will be tested like never before. Whether through innovations in electric vehicles, strategic partnerships, or bold new designs, Ford has opportunities to redefine itself. The road ahead may be uncertain, but the stakes have never been higher. Ford's journey is not just about survival, it's about proving that even a century-old giant can evolve to meet the demands of a rapidly changing world. Ford's electric gamble, a $3.7 billion problem. Ford bet big on electric vehicles, but what if that gamble is costing them $37,500 for every car they sell? That is the reality facing the automaker as its electric vehicle division struggles to balance ambition with profitability. Ford's electric vehicle segment, branded as Model E, recorded losses of over $3.7 billion in just the first 9 months of the year. For every 32,000 electric vehicles sold, Ford faced staggering financial deficits. The question arises, how did it come to this? Ford's miscalculations in forecasting demand have been compounded by supply chain challenges and consumer hesitation about electric vehicles. While electric vehicles are often seen as the future of the automotive industry, buyers remain skeptical about their affordability, charging infrastructure, and long-term reliability. The Ford F-150 Lightning, once heralded as a game changer, saw production halts due to limited demand. Dealers are overwhelmed with inventory, leading some to refuse new shipments until older stock moves. This problem is not unique to Ford. It reflects broader industry-wide struggles. Automakers across the globe are wrestling with overproduction, shifting market trends, and the high cost of transitioning to electric vehicles. Here's why this matters. Ford's difficulties are a microcosm of the electric vehicle market's growing pains. The challenges it faces today will shape the strategies and innovations of tomorrow's automotive industry. Wall Street reacts. Ford's stock takes a hit. Ford's latest financial report did not just disappoint investors, it shocked them. While revenue for the third quarter grew by 5%, reaching $46.2 billion, net income dropped significantly, with profits sliding to $900 million from $1.2 billion the previous year. Ford's financial outlook appeared grim, adding fuel to the fire. The company lowered its full-year earnings projections, trimming estimates by nearly $1 billion. This downward trend sent ripples through Wall Street. Morgan Stanley downgraded Ford's stock, citing concerns about the automaker's profitability and long-term growth prospects. These concerns highlight the broader challenges facing Ford as it juggles rising production costs, inflation, and an intensely competitive market for electric vehicles. And this ripple effect could signal bigger trouble for the entire auto industry. Ford's struggles are a stark reminder of the financial tightrope automakers must walk as they transition to sustainable models. Investors, dealers, and consumers alike are watching closely, wondering whether Ford's current strategy will yield long-term success or push the company further into uncertainty. Dealerships losing faith. When major dealership groups start walking away from Ford, it is clear something is very wrong. Recently, AutoNation, one of the largest dealership networks in the United States, decided to sell 8 of its dealerships. Among them, 5 were Ford franchises. This move was not a coincidence. It was a calculated decision reflecting growing discontent with Ford's performance. Dealerships serve as the bridge between automakers and consumers, making their faith in the brand critical. For Ford, losing dealerships means fewer touchpoints with buyers and less visibility in an already competitive market. Smaller, independent dealerships face similar struggles as they grapple with excess inventory and rising operational costs. This changes everything because fewer dealerships mean fewer opportunities for Ford to reach buyers. For a company already dealing with plummeting sales and rising skepticism, this loss amplifies the urgency to address internal inefficiencies and rebuild trust with its network of partners. Ford's identity crisis. How did a company that put America on wheels become a symbol of inefficiency and mismanagement? Ford's current struggles go beyond financial losses and inventory gluts. They cut to the core of its identity. For decades, Ford represented American ingenuity and resilience, but recent years have painted a different picture. Internally, the company has faced significant challenges. Outdated manufacturing practices and supply chain disruptions have delayed vehicle launches, frustrated customers, and strained operations. Leadership conflicts have further complicated matters, with decision makers torn between preserving Ford's traditional roots and embracing a future centered on electric vehicles. The result is a company stuck in limbo, struggling to define its place in a rapidly evolving industry. This isn't just Ford's problem, it is a lesson for any company clinging to the past while the world moves forward. Ford's challenges serve as a cautionary tale about the dangers of indecision and the importance of adaptability. As the automaker navigates these turbulent waters, it must confront the reality that reinvention is not optional, it is essential. Only by embracing change can Ford hope to regain its footing and reclaim its legacy as a pioneer of the automotive world. Can discounts save Ford? Ford slashed prices on its most iconic models, but is it enough to win back buyers? The Ford F-150, Bronco, and Maverick have all seen significant markdowns, enticing buyers with deals that were unthinkable just a few years ago. In some regions, these discounts have sparked a surge in interest, with customers flocking to dealerships to take advantage of the offers. However, this is not a uniform trend. Regional variations play a crucial role in how these discounts are perceived. In rural areas, for instance, the Ford F-150 remains a staple, with discounts providing much-needed relief to working-class buyers. In urban markets, however, the Bronco's appeal seems to be waning, even with lower prices. The perception of discounts also ties closely to the brand's overall reputation. Ford's legacy gives it an edge, but systemic issues within the company continue to undermine consumer trust. This leads to a critical question: can discounts alone fix the deeper problems that have been plaguing Ford for years? While these price cuts may serve as a temporary boost, the broader picture is far more complex. Issues such as inefficient production lines, misaligned leadership, and lackluster innovation continue to hold the company back. To truly secure its future, Ford must go beyond pricing strategies and address these foundational issues. Interestingly, the impact of discounts differs even within Ford's model lineup. For example, while the Ford F-150 has seen a steady uptick in sales following price cuts, the Maverick has struggled to maintain the initial momentum it garnered upon release. The Bronco, once a sought-after model with waiting lists and sky-high markups, now sits in dealership lots, accumulating dust. In these cases, the effectiveness of discounts depends not just on the amount, but on the broader consumer perception of the vehicle's value. A vehicle's price must align with its perceived utility, reliability, and desirability. Here's the twist: even with attractive pricing, Ford's long-term success depends on addressing inefficiencies, modernizing production, and better aligning its offerings with consumer demands. Discounts can entice buyers in the short term, but they cannot resolve the deep-rooted challenges that have eroded Ford's market position. Until these systemic issues are resolved, discounts may only serve as a temporary band-aid, not a lasting solution. Lessons from Tesla and Toyota. What is Tesla doing right that Ford keeps getting wrong? The comparison between Tesla's electric vehicle strategy and Ford's efforts highlights glaring differences. Tesla's agility, combined with its focus on innovation, has allowed it to dominate the electric vehicle market. The company's streamlined production processes, vertical integration, and data-driven approach to decision-making set it apart. By maintaining tight control over every aspect of production, Tesla has managed to cut costs, deliver products on time, and introduce features that captivate its audience. This focus on customer experience and innovation has enabled Tesla to build a fiercely loyal consumer base. On the other hand, Toyota's resilience lies in its hybrid-focused strategy. By bridging the gap between internal combustion engines and fully electric vehicles, Toyota has positioned itself as a leader in sustainable mobility. Its incremental approach allows the company to cater to a broader audience, including those hesitant to adopt fully electric vehicles. Additionally, Toyota's reputation for reliability and efficiency gives it a unique edge over competitors who rely solely on innovation to differentiate themselves. Ford, by contrast, has struggled to define its electric vehicle vision. While models like the Ford F-150 Lightning have shown promise, production issues and pricing missteps have hindered their success. Inconsistent messaging and execution have also created confusion among potential buyers. Meanwhile, new competitors like Rivian and Stellantis are carving out their own niches. Rivian's focus on adventure-ready electric trucks and Stellantis's commitment to leveraging diverse brand portfolios offer unique strategies that Ford could learn from. Rivian's ability to target a specific market and build excitement around its products contrasts sharply with Ford's broader but less cohesive strategy. This matters because it underscores the importance of bold, strategic thinking. Ford's future may depend on adopting lessons from its competitors, such as simplifying production lines, adopting flexible pricing strategies, and investing more heavily in research and development. For example, Ford could benefit from creating clearer, more compelling branding for its electric vehicle lineup, mirroring Tesla's ability to make every model feel aspirational. The road ahead is challenging, but the potential for transformation is undeniable. The road ahead for 2025. Ford is pinning its hopes on the year 2025, but are its plans bold enough to make a difference? As the company works to clear its inventory of 2024 models, it is simultaneously preparing to roll out its 2025 lineup. This new lineup promises updates and features designed to reinvigorate interest in Ford's vehicles. Early glimpses reveal a focus on enhanced technology, improved fuel efficiency, and bold design changes. One of the key highlights of the 2025 lineup is the anticipated update to the Ford F-150 Lightning. This electric version of Ford's flagship truck is expected to incorporate significant improvements in battery efficiency and towing capacity, addressing two of the most common criticisms from consumers. Similarly, updates to the Bronco and Maverick aim to rekindle excitement around these models, with new trims and features tailored to specific market segments. The challenge, however, lies in ensuring that these updates resonate with consumers. Buyers have become increasingly discerning, expecting not only quality but also affordability and innovation. Ford's ability to meet these expectations will determine whether its 2025 lineup becomes a success story or another missed opportunity. The rollout will also test Ford's ability to navigate supply chain challenges, production efficiency, and dealership dynamics, factors that have historically been points of contention. This could be Ford's chance to turn things around, or its final stumble before falling behind for good. The stakes are high, and the company's leadership must navigate this critical period with precision and foresight. What happens next will not only shape Ford's future, but also influence the trajectory of the entire automotive industry. What Ford's struggles mean for the industry. Ford's challenges are just the tip of the iceberg. What does this mean for the future of cars? The automotive industry is undergoing a seismic shift driven by the transition to electrification, advancements in autonomous technology, and changing consumer expectations. Ford's struggles highlight the pressures that legacy automakers face as they attempt to adapt to this rapidly evolving landscape. Other automakers are also grappling with similar challenges, but some are finding ways to thrive. Companies like Rivian and Stellantis are emerging as key players, introducing innovative models and strategies that resonate with modern consumers. Rivian's electric trucks, for instance, cater to a niche market of adventure enthusiasts, while Stellantis leverages its diverse portfolio to offer a wide range of options. These companies' ability to adapt quickly and innovate effectively provides a stark contrast to Ford's slower, more traditional approach. This matters for you because it reveals how the cars of tomorrow could look and how much they will cost. As the industry shifts, consumers will see more options that blend cutting-edge technology with practicality. However, this evolution also raises questions about affordability and accessibility. Will electric vehicles become more affordable as production scales up, or will high prices continue to deter many potential buyers? The answers to these questions will shape the future of transportation. The implications extend far beyond Ford's immediate challenges. What happens within the company will serve as a case study for how legacy automakers can or cannot navigate the demands of a new era. Ford's efforts to redefine itself are not just about survival, but about setting a precedent for the industry. Its successes and failures will offer valuable lessons for competitors, new entrants, and consumers alike. As we look ahead, it is clear that the automotive industry is at a crossroads. Companies must innovate or risk becoming irrelevant. Ford's journey serves as a microcosm of these broader trends, illustrating both the opportunities and pitfalls of this transformative period. Whether the company can rise to the occasion remains to be seen, but one thing is certain: the decisions made today will shape the cars we drive tomorrow. The electrification race. Can Ford catch up in a world racing toward electrification? The shift to electric vehicles has become a defining trend in the automotive industry, with companies like Tesla setting the pace. For Ford, the challenge is not only to compete, but to innovate in a market that demands sustainability, efficiency, and cutting-edge technology. One area where Ford could make significant strides is in battery advancements. By investing in solid-state batteries and increasing charging efficiency, Ford has the opportunity to redefine its electric vehicle lineup and close the gap with its competitors. Another critical factor is consumer behavior. Buyers today expect electric vehicles to offer more than just environmental benefits. They want performance, range, and affordability. Ford's ability to understand and respond to these emerging trends will determine its success in the electrification race. Moreover, innovative solutions such as vehicle-to-grid technology and enhanced connectivity features could position Ford as a leader in this space. And this could reshape how we view car ownership and sustainability. As Ford refines its electric vehicle strategy, it has the potential to set new standards for what electric vehicles can achieve and how they integrate into our lives. What Ford must do to survive. If Ford doesn't adapt now, it risks becoming a relic of its own history. The challenges facing Ford are immense, but so are the opportunities. To survive, Ford must fully embrace innovation, prioritizing not just electric vehicles, but also autonomous driving technology. While competitors are making bold moves in automation, Ford's progress has been slower and less defined. By doubling down on research and development in this area, Ford can position itself as a forward-thinking brand ready for the next era of transportation. Another critical step is improving affordability. High prices have alienated many of Ford's traditional customers, especially in an economy where buyers are more cautious than ever. Ford needs to revisit its pricing strategies, offering competitive options that appeal to both budget-conscious buyers and those seeking premium features. This approach could help rebuild consumer trust and loyalty. Dealership relations also require a significant overhaul. Ford's reliance on dealerships has created friction, particularly when it comes to pricing and inventory management. By fostering stronger partnerships and ensuring a more consistent customer experience, Ford can enhance its reputation and streamline its operations. Here's why this matters. Ford's success or failure could set a precedent for the entire industry. How Ford navigates this transformative period will be closely watched, and its actions could influence the strategies of other automakers. Is Ford too big to fail? Is Ford's legacy enough to save it from becoming irrelevant? The idea of Ford as a too big to fail company raises important questions about government support, investor faith, and consumer loyalty. Ford's historical significance and economic impact make it a cornerstone of the automotive industry, but these factors alone may not be enough to ensure its survival. One potential lifeline is government intervention. In the past, industries deemed critical to the economy have received financial assistance to weather storms. If Ford's challenges grow more severe, could a bailout be on the horizon? Such a move would not only provide short-term relief, but also signal the importance of preserving a brand that has shaped American culture. Investor resilience is another key factor. Ford's ability to maintain the confidence of its shareholders will depend on its strategic vision and execution. Clear communication, coupled with tangible progress in addressing its challenges, could help sustain investor faith during turbulent times. Finally, consumer loyalty remains a wild card. Ford's loyal customer base has long been a source of strength, but loyalty alone may not be enough to overcome rising prices and shifting preferences. Ford must find ways to reward its customers' faith while attracting new buyers in an increasingly competitive market. And this raises the question, how much are we willing to pay to keep an icon like Ford alive? As the company faces immense pressure to adapt to the ever-evolving automotive landscape, the choices made now will have a profound impact not just on Ford's future, but on the entire industry. The way Ford responds to the shifting demands of consumers, the push for electric and autonomous vehicles, and the growing interest in alternative car ownership models will be crucial in determining its survival. This moment of transformation offers a unique opportunity to redefine what a global automotive leader looks like in the 21st century. So what do you think Ford needs to do to secure its future in this rapidly changing industry? Comment down below and let us know your thoughts. Thanks for watching.